just looking at the numbers in general, like, okay, if you buy a house and it appreciates at X over time and you excluding fees, how much do I make on this? And does it perform better than what the market typically does? I mean, all of those are relatively simple math problems that you can work out. So it really kind of, is it right? Is it the smart thing to buy right now? It really depends on how you answer all those questions. What's up, y'all? Welcome back to the Austin Home Guy podcast. I am your host, Derek Peterson, and today I am visited once again by Jonathan Sarver of Hill Country Mortgages. How you doing today, Jonathan?
So far, so good. Can't complain. It's a great Wednesday.
I was going to say, this spring has been busy, man. We've been pounding the pavement a bit. So, which was, not expected, but also, I welcomed it. And I would kind of, and I don't know your feelings on this, but, I would kind of, lump this into the category of not that the market is back, because I don't think that that's necessarily the case at the moment. I would say that there was so much pent up buyer demand and so many people waiting to make a move and do something that I think a lot of people finally just had to realize, like, amidst the chaos of like what's going on in the world and in our country at times, that, you still have to like put your family first and make a move, like do something that's better. So if you have the funds and you were hoping to, buy when things were a little more affordable or rates came down, you finally just sucked it up and started looking for alternative ways to get into a house that you wanted. And I feel like that's kind of I feel like this spring has been like a pent up buyer demand for the last like 2 years.
No, absolutely. And I think a lot of it, you hit the nail on the head. It was a lot of it where people like, 2022, when rates started going up, everyone's like, oh, I'm going to wait for them to come down. Heard the same story in 23. And people had it in their mind that the rates from, 2020 and 2021 were somewhat, so many people normalized them in their head. And those were extreme rates for extreme times. And frankly, did more harm than good. If we're going to look back at that, I think we're far enough away to look back and I enjoy my rate that I have on my house because of that, and I enjoyed helping a lot of people because of that. But I think that did a lot of harm to the market, and I don't think we're ever going to see rates like that again, specifically because what they saw from the fallout of it. Will we see lower rates again? Sure. Do we know when? Absolutely not. I mean, we're definitely heading lower earlier this year before the Iran conflict. But if you really zoom out, since 2022, we've been in the same tight range, bouncing essentially between 6 and 7. And it's been there since. And there's been more volatility certain times. 6, 7. Because the end of February, we're tracking where, more and more people are starting to get below 6. And then the Iran conflict triggered, oil prices, which triggered inflationary fears. And we're seeing that in more recent data. Inflation is being stickier. And we're seeing that rates and rates are going up. I'm like, we're still mid to low 6s. We've been in this range. So a lot is just tuning out the noise, especially for people that are still on the fence and we're wanting to buy in 2026. It's a matter of what's right for you. Stop trying to time the market. Stop trying to time the rates. If you're wanting to buy, the best time to buy is when you're ready.
Yeah.
I've been saying that for years.
Yeah, we have to kind of reiterate that point. As far as agents go, it's been a little bit of a different thing because, like a lot of agents jumped into this industry because of the influx of real estate transactions through, 2020 to 2022. So if your introduction to real estate was that, these last few years have been rough. And I remember like in the end of 2023, early 2024, there's this real estate saying, survive until 25, just get through it because rates are coming down in 25, right? 25 is going to be so much better. Doesn't happen. And then last year was a mess. And then we get into this year and rates started to, peak under 6%. And, Iran war hits and now we're right back over. And, I think people, for the most part, there's some themes to like what's going on. So a lot of the people that I'm working with right now, as far as transactions go, are people that I've been having conversations with for literally years. about
Yeah.
either selling or purchasing a home, and they finally decided that this was the time. And I
Hmm.
think that there is some wisdom in strategy, right?
Absolutely.
Because we see uh, affordability is still an issue. It's a huge issue, and
Yeah.
pricing for the most part, if you look at the market, we've corrected quite a bit on pricing. Pricing has come
Uh,
down from 2023 till now. We're getting pretty close, if not at, or sometimes even below, depending on the neighborhood, the line of, if you take out the window of extreme peak high purchase sales and you go back to 18 and add 3 to 5% year over year growth, we're
yeah.
we're about back on that trajectory. So we
Yeah.
basically cut out all of the peak. Like as far as pricing goes, we're getting close. Now, that doesn't take away the fact that property taxes and homeowners insurance have still and rates have
Yeah.
gone bananas. So buying a house right now still, it seems crazy. And the crazier part about that is those are fixed costs, right? Like,
Yeah.
well, not fixed costs. Like those are, they're not fixed costs, but they're costs that have, uh, increased so significantly that it's really hard to see them ever at what point
Yeah.
do you see
It's
insurance companies drop their pricing incredibly low, and
Yeah. That's the
you
biggest
have to
thing is
fight
the
property taxes for
insurance.
years to get them down, right?
Yeah, I
So
mean, taxes definitely spiked. Thankfully, I'm a big believer in the protesting your tax rates, and every other year they talk about like, oh, we're going to eliminate property tax or all this tax. Like, okay, sure, could that happen? Yeah. Will it? Probably not. But insurance, I mean, I've seen insurance premiums 100 to 150% increase since 2022. Like it's literally gotten insane, and it's almost when does I'm not a big government intervention. Government always screws things up, but at a certain point, eh, eh, insurance companies like, oh, we had these storms, we had to pay these claims, so we have to increase our premiums. That's your job. Like that's what you are as a business. Like,
yeah, yeah, that's what you
I'm
signed
probably,
up for.
yeah, I'm probably way oversimplifying it. I'm sure I'm going to piss off some insurance people, but it's if you're saying like, oh, we have to increase our premiums so much because we had to pay this. I'm like, that's that's your job. Like that's what you're there for. Like, I've never filed an insurance claim. My insurance is still literally since 2021 when I bought my house, it's almost tripled. I've
Yeah,
still have never filed a claim, and we built a brand new home at 21. So I'm like, so every year I shop it. I'm just like, I'm going to keep shopping it every year. I'm like,
yep.
because it's if you're going to try to jack my premium up because you had to pay storm damage, and I'm glad you are paying when you guys are, but it's I don't know. This could go into a wildly capitalistic conversation where it's like, the bottom the almighty dollar and you always shareholder revenue, and so you get these insurance companies that are like, oh, we had to pay this, we have to get our revenue up every year. The
Yeah,
perpetual growth engine. Um,
you're not
is
wrong though,
going to
but
start
this is
grinding things to a halt.
Yeah, these two things have got to be they've got to be addressed when we're if we're talking about like collectively as a culture, wanting people to be able to own and build wealth through housing, which is their primary vehicle to build wealth in our country, right?
Yeah,
Then we have to look at all the factors of it, because if you look, interest rates can be brutal, right? Like, and you look at an amortization schedule, and
uh
over 30 years you're paying a lot for the house, but it's over 30 years. And if you
yeah,
look at what the PITI for most mortgages is, like if you once you've added property taxes and homeowners insurance, like the mortgage itself, the mortgage payment and the interest rate are typically actually relatively manageable. But then when
yeah,
you throw on property taxes and insurance, and in my opinion, look, if you're forced to carry insurance for something, anything, like, right?
yeah,
So if you have to get a mortgage, if you have to pay homeowners insurance, right? You have to have coverage, then that should be regulated. Like, there
yeah.
shouldn't be
Well, title insurance is.
yeah, title and dude, we do it with so many things in the
Yeah,
world. The problem is that the insurance lobby is is so freaking strong that it's,
Yeah.
that passing anything around this stuff. But yeah, homeowners insurance across the board. I think we need to probably make a push towards governmental oversight to make sure that we can, because it's, like these companies being for profit and then also buying up all the competitors. So when new insurance companies come up, they all end up getting rolled into these bigger insurance companies at some point, because they view them as a threat. And so,
Yeah.
yeah, and the downside to that is we as homeowners and my first time home buyers are often the ones that get gouged the most. Like it's crazy to me that buying a $500,000 house in 2021 with a 3% interest rate, with lower property taxes and lower homeowners insurance, your monthly mortgage payment with 20% down on a $500,000 home in Austin would have been between 22 and 2,400 bucks. If you
Yeah.
were buying a $500,000 house right now in the same neighborhood, your mortgage payment with $100,000 down is likely between 35 and $3,700 a month. So
Oh
that's a
yeah, easily.
potential that's a potential $1,500 swing for the exact same house only 5 years later. Dude, that's like the equivalent of renting an apartment. The numbers just don't, the math doesn't make sense. And for the majority of people, so I understand the hesitancy. And yeah, I mean,
Yeah.
things have to change. Now, the flip side of that, the positive side of it is that, you know, if you can make the numbers work at the moment, there is a world where buying still makes a lot of sense right now. And so,
Oh, absolutely. I mean, it's one of those things that it's, as a mortgage broker and even as a realtor, like I've always pushed get back against the notion that, like, everyone should buy a home and, you don't want to rent and all that. I'm like, no, I mean, there's certain lifestyles and there's certain people that renting forever absolutely makes sense. And there's nothing wrong with that.
yep,
And not, yeah, I have an investment property. I want my renters to stay there. I actually just lowered the rent so they signed a longer lease term when we renewed.
yep.
But at the end of the day, it's you want to have people do what's best for them financially. And this whole, like, you can only build wealth through real estate. Like, no, you can build wealth other ways. Is it the primary biggest engine documented historically? Yes, but that doesn't mean someone that only rents their whole life can't, be financially set up for life either. So that's one thing I've, big pushback on. Everyone's like, oh, if you pay rent, that's 100% uh, interest on someone else's mortgage. I'm like, okay, like that goes right along, like, with the date the rate, marry the house people, the same people said a couple years ago, and like now that it's you can't lump some group the people into the groups like that. It has people have to do what's best for them.
Yeah, the math is so much more complicated than that, right? Because
Yeah.
really what it comes down to, like, we did this math for a condo I had listed downtown a bunch, because to purchase the condo that we had listed with 20% down, your monthly payment would still be about $2,000 more than what it would cost to rent the exact same unit in the building. And
Yeah.
so it didn't make sense, right?
Yeah.
For most people. And so there is a world where renting makes a lot of sense. And it makes, it's what you're doing with the difference, right? It's
Yeah.
okay.
Exactly.
If my cost of living is so low because I'm renting, and what it would cost me to purchase, is X, whatever you're doing with that additional money and how that investment is performing really dictates whether buying a home is smart or not. Now, if you're a roots down kind of person like me, somebody that doesn't like to move and plans on being in the same place for a very long time,
Hmm.
buying a home makes a lot of sense, because I can improve it, I can grow in
Yep.
equity, I pay it down. Once it's paid off, we have no mortgage, so we live basically off of property taxes and insurance. So there's, in that sense, for us, it makes a lot of sense. But yeah, I think the world where, and just like everything, right? uh Information travels quickly, and once people figure out you can make money in certain areas, then those margins start to get bled into quite a
Yeah.
bit. So, and I think that's just happened in real
Well,
estate over the last 15 or 20 years.
and you made a great point though about, like, what you do with the difference, right? It's, buying a condo in a unit where you could rent it for a third less. What are you gonna do with the difference? So, good point. I mean, the same thing. I'd make that same conversation when I'm talking to people about refinancing. People are like, oh, refinances. It's not just about lowering the rate and saving money. What are you going to do with that money? Like,
Yeah.
do you have a setup plan for whether you're going to invest it, or a lot of times like be making the same payment even after you refinance, and you're just knock years off the mortgage. Like, there's different things to do. It's all about setting up what's the financial plan, what's the financial goal. And like, yeah, I'm not leaving Austin. That's why, like, I've always bought, and it's my fourth home I've purchased here, and since 2016, we have moved around a lot. This is the house that my kids now are in school district, so I'm going to stay in this house for much longer than have the other homes. But yeah, it's so I've always kind of just cringed, I guess I'd say, when people are like, oh, you're paying 100% interest when you rent and all this stuff. I'm like, no, there's people do have lives, and there is math to be done in every situation.
Yeah.
Like, it's, um,
And to be honest, sometimes renting's great. Like, if you have a good landlord, or you're renting in an apartment, they take care of everything. Like,
yeah,
if you're busy, you travel a lot, you prefer to you're not roots down kind of person, you don't need a home base. Like, dude,
no,
renting makes all the sense in the world. And furthermore, sometimes it's just the convenience of life. If you don't like dealing with house stuff, because yeah, owning a home is stressful. You're
yeah,
we're constantly dealing with improvements, and paying to get, we just paid $600 to have our floors cleaned because we
yeah,
have, four kids and two dogs. And,
yeah,
we have to repaint our deck every year because it gets torn up by the kids and the dogs. We have to
yeah,
do touch up work all around the house. Like, home ownership's expensive. So like,
yeah,
if you don't have a vested interest, and then also just looking at the numbers in general, like, okay, if you buy a house and it appreciates at X over time, and you excluding fees, how much do I make on this? And does it perform better than what the market typically does? I mean, all of those are relatively simple math problems that you can work out. So it really
yeah.
kind of, is it right? Is it the smart thing to buy right now? It really depends on how you answer all those questions.
Exactly. And that goes back to what we started the conversation with, is if you're wanting to buy and you can buy, then the right time is buy is now.
Yep.
I've been saying that for years. People are like, oh, should I wait for rates to go down? I'm like, I'll hammer this point all the time. Rates going down just means appreciation increases.
Yeah.
So it's a matter of, do you want to pay more later to maybe save a less? But it's depending on how much the price increases versus how much the rate goes down. I mean, yeah, there's so many different factors in it. So I've always said, people ask me, is it a good time to buy? I'm like, are you able to buy and do you want to buy? Those are the only questions that really matter, if it's a good time to buy or not.
Yeah.
Like,
And if you're looking at it just from a solely investment standpoint, the two questions that are probably the most worthy of asking that drives the market, right, is job growth and interest rates. So
yep,
when job growth is happening and interest rates are coming down, that's when your equity sees the biggest bump. So you want to have purchased prior to those two things happening, because that's what
mhm,
increases your equity. So if you've purchased before the job market gets better and before interest rates come down, then you're going to experience the bump of seeing, of equity once those things happen.
yeah,
And if you're buying in line with when those things happen, then you're much more likely to experience a further dip in the future, which is what happened to all those people that purchased when rates got super low and the job market was going crazy in
yeah.
2021. So
Yeah, I
2020,
mean,
2021.
I definitely benefited from that specifically. I mean, I sold at that peak and then I bought at that peak, but thankfully I bought with a builder that didn't change the price. So I went under
Yeah.
contract before things went crazy. So that was good timing
Yeah.
on that aspect. But I mean, again, speaking about timing of the market, I didn't time the market. That was just, we were about to have another kid. I needed a bigger home, and it just worked out for me. So there's no, could I do that again if I tried? No.
No.
Everything just aligned.
Yeah, and we did the same thing. We bought in late 2020, and we did it because it was the best thing for our family. Like
Yeah.
my wife and I decided to get married, and we wanted a place for our kids. So I knew when we purchased that the purchase we made could go underwater, and it did for a minute.
Hmm.
We're probably at break even right now if we're lucky, and that's after investing about 200,000 into our house and renovations. So
Yeah.
like it's different for everybody, but we're roots down kind of people, and we didn't look at our houses
Yeah.
hey, we're worried about this over the next 5 years. We're like, yeah, we plan to be here until minimum until our kids are out of high school. But
Yeah.
maximum, we may end up being here until we can't go up a flight of stairs anymore. So
Yeah,
we'll see.
exactly. So it's, I see so many people, I've seen, the fear mongering media that loves to post about stuff like, oh, people that bought then, they don't have the equity now. I'm like, well, unless they're planning on sell, it's irrelevant. Like if you
Yeah.
bought a home and you're gonna be like, I'm gonna be here for 7 to 10 years. Okay, if you're not flooded with equity in 3 years, that doesn't matter.
Yeah,
Like it's
I don't
yeah,
need the equity in my
yeah,
house right now. Yeah,
yeah,
we've got everything we need, which is and so that's where I think that's a good place to kind of wrap this conversation. I want to end this though with just kind of a state of the union. Where are rates at right now? And do you with the new Fed chair that just got brought in yesterday? Do you have any predictions for the end of the year?
yeah. So state of the union right now, rates are still in the range. Like I was saying before, I would say to be casual, mid sixes, let's make it even on that. Credit score, everything will factor into it. VA, FHA, you're going to be around six, if not still in the fives, depending on the situation. In regards to the new Fed chair, I think his hands are tied. I fully expect there to be a rate hike at this point this
Yeah,
year. There's not going to be a rate cut. They have to keep control of inflation, even though the inflation is based on the oil situation. So everyone should be paying attention to oil cost. I'm hopeful for the China summit coming up between the U.S. and China. Hopefully, some negotiations happen there where they can help put some leverage in the situation with Iran as well. Hopefully, because that is what's dictating everything right now.
yeah,
People are like, oh,
yeah,
inflation is going up. Oh, like because of the oil, like, and that's
yeah.
because of the Iran conflict. So now I
Because
want to
everything in
cautious.
our economy operates like everything operates off of oil. If it's
Well,
shipped,
yeah.
if it gets in a car or a plane at
Oh,
any point to
or
move it
manufactured even because it's
or
people think
manufacture
like
or yeah,
if people think oil
oil's
and they
used
think
to
the
run
gas in their
machines.
car or but
Yeah,
even like every piece of plastic, everything you interact with on a daily basis, every item you touch, oil is involved. So
yeah,
that's where the big thing is. So I'm optimistic. I think like rates still being in the range. I think the buyer pent up demand is there. I think people are just kind of been like people have been like, whoa, this Iran situation. But for the most part, if they've been looking to buy, they have not seen some significant dip in rates in 4 years. So it's just time to buy for them.
yeah.
So
Exactly.
just keep pressing on.
Exactly. Yeah. And on the real estate side, we had a relatively good spring for what it was, which I'm thankful for because,
Yeah.
we needed the business a little bit. And, we're I think this summer is likely gonna feel similar to last summer. And then I
Yeah.
think the fall is gonna be completely contingent on, the state of the world. And,
Yeah.
the only benefit to us being a two-party system and having a bunch of people fighting over their political jobs is that sometimes they try to make life better for us right before
Yeah.
voting happens. Like they actually try to swing people's votes by doing good things for the massive amounts of Americans that are just trying to live life on the daily. So we hopefully as we go into the fall, things improve enough for people to feel confidence in coming out and being consumers. But if it
Yeah.
goes the other direction, we may be in for it for another 6 months to a year until
Yeah.
hopefully things lighten up at some point. But we'll see. So
Good.
well, off to the next one, and we'll see you. We'll try to do this again in a couple weeks.
All right. Sounds good, man. I'll talk to you.
Talk to you.